Good morning, traders and investors. Steve Gans here, and welcome to the weekend update on Mother's Day, May 11th, 2025. So I'm going to go through the different indexes that I normally go through, but I'm also going to add in a trade idea at the end of this video that will tie in with what I deem to be the current market conditions. So please make sure you stay tuned for that all the way through the video. Second thing, if you find this content of use, please subscribe, give me a thumbs up. I greatly appreciate that. It helps me know that I'm on track providing content that people enjoy and is helpful to them. With no further ado, let's start digging into our indexes. All right, so I always like to start off with the S&P 500 index. That is the main index I feel that drives our markets out there at this stage, and is probably the most used one that people look at to try to determine market trends and ideas. And of course, our trend in recent weeks has been significantly up after, of course, these massive down moves on tariff announcements a few weeks ago. So where are we right now? I personally believe that we're coming back into a bit of a resistance area, that kind of green line I have there. The other thing that makes me feel that's possibly a little bit of a resistance area, two additional factors here. One is we're hitting the top of the Bollinger Band. That's that red line here. That is one of the indicators that I use. So we are near that Bollinger Band, which oftentimes indicates somewhat of a reversal point. Another one might be RSI, Relative Strength Index, down here in the bottom right corner. When that gets up in that 60 to 70 range, many times that indicates an overbought market. Now, one other key factor here, this blue line that's down here comes up and across, that is our 200-day simple moving average. That is also a major indicator in our overall markets. When you get what's called a crossover, so that 200-day being a major indicator of the market, when we fell through the 200-day here, we fell with some force, we rallied right back to the 200-day, then sold off hard. Again, right now we're coming right back up to that 200-day, which I suspect may also still be a little bit of a resistance area. Does that mean I think we're going back to these lows? Not necessarily, but I do think that some pullback here or some backing and filling is likely. Now, one item that gives me a little bit of maybe an uptrending sort of look, where these others give me a pause or a downtrending look, is we can see here these green bars. On up days, our volume recently has been a little higher than it's been on the down days. That is a little bit of a bullish indicator. So I'm getting some mixed signals here right now from the S&P 500. Again, it's coming into what I consider to be some resistance areas, but it also is holding up fairly bullish from a standpoint of volume. Now, take a look at SPY. SPY, of course, is going to look exactly the same. SPY is just 1/10 of the size of the SPX, the SPX being the major index, the SPY being the ETF that mirrors that major index. Then we'll look at VIX, which is the volatility of the S&P 500. Now that is coming back down here to lows. That said, it's still at around 21. When we were truly at lows, we were back here at around that 14 range or so. So while volatility has dropped off significantly, it still is holding up slightly elevated. Let's take a look now at the Qs. So Qs, very similar look to the S&P 500, our 200-day moving average. We are right on it here in the Qs. So again, we'll have to see if we break through that moving average. Same story here. When we fell through it over here, we fell pretty hard. Once we broke that average, we rallied right back to it, and then we sold off hard from that 200-day moving average again. Volatility in the Qs we're going to see is pretty similar. It is stabilizing a little bit here at a lower level than it recently has been, but it's nowhere near back around this 16, 17 range. It's still up and around that 25 range. So volatility on the Qs is up there, still elevated a bit. And then we look at IWM, and IWM is nowhere near its 200-day moving average. It has not rallied back as much as the other indexes have. We take a look at volatility on it, and we'll see that it also, while it has gotten lower, it's not anywhere near what it had been back here in the 20s. It's still in around the 25 range. So volatility on IWM is still slightly elevated as well. So what does this kind of tell me overall? Quite frankly, it's painting a picture of some confusion. Markets at a point where there isn't what I would call a clear direction at this moment. Some of our economic announcements that have recently happened, etc., are also leading me a little more into the bearish range. I know there's been a lot of work done on tariffs, but it is still an environment where many companies, as we know from the last earnings season, are basically saying, we're not making any projections for the next quarter. The market and or the political environment is just a little too unstable right now with too many changes for companies to try to model and plan for those changes when we don't know exactly what they're going to be to the good side and to the bad side. So that wraps up the weekend update. I did tell you that I was also going to give you a trade idea based on that update, and I'll provide a link to that trade idea in the description down below so that you can go click on that link and it will instantly open up in OptionStrat for you to view that particular trade that I think could be a reasonable trade in the coming weeks. So if I hold an opinion that I don't think our markets are probably going to go much higher, I think they're likely to chop sideways or maybe go a little bit lower, I might look at a shorter term trade here. So this is roughly a 30-day trade. I think everyone knows I really like the butterfly trade. This is an iron butterfly. And I like the way this sets up because if our market stays in this general range where it is now, maybe even that 565 to 575 chops back and forth in this general range here, this will decay into a decently profitable trade. Now, I do not try to take these trades all the way to expiration. At expiration, this trade can have as much as a $1,400 profit with a max loss of $1,000 if the market rips up and gets all the way up into this range. Of course, if I saw that happening, there would be ways that I would consider adjusting this trade so that I didn't receive the full brunt of that loss. But if our market stays chopping back and forth here from, say, the 560 to 585 range, I should end up with a fairly decent profitability within a few weeks. If the market were to sell off hard, no matter how hard it sold off, I would still end up with roughly $120 in profitability, no matter how low the market goes. So this might be a trade to consider paper trading. Check it out, see how it moves as the market moves. And again, just go below, look for that link, and you'll be able to open up this exact model, whether you have an account or not. And if you like what you can go ahead and open up a free account with OptionStrat as well. So that wraps up our weekend review of the markets. Now, those of you that are part of the alert service, let's take a quick look at that. So I think as those of you in the alert service know, in recent weeks, I've gone to doing shorter term broken wing butterflies. I found that a 55-50 butterfly has been working pretty well in this current market. And I put on 5 of those in recent times as part of the alert service. And so far, I'm running 100% as far as the win ratio. So 5 out of 5 have been winners. On average, they're averaging about $250 in profit. Combined total on those trades is up about $1,235. These are all the individual trades using my exact fills on those trades, both at entry and on exit. I currently have an open one as well that was just opened on Friday. It's down slightly right now, but largely because of bid-ask spreads. So at the end of the day, one of the things I'm going to start to focus on, and I am working on kind of a new trade concept and idea that takes advantage of this shorter term, where these butterflies have been working a little better on shorter term that takes advantage of that. So I'll share more about that in the next week or so as I get that a little bit further developed. But that will be a trade that I'll start to be using in the alert service in conjunction with the shorter term butterflies. It's actually a variation of these shorter term butterflies. If you're interested in finding more out about the alert service, where I make my trades live in real time, I put a link on the screen right here. I'll have a link in the description below as well. You can check that out. But right now, after closing out some of those winners, these are the remaining trades that are open. So this broken wing butterfly, which follows that, essentially that kind of rule set, if you will, that I've been trading those other butterflies on. This was open on Friday. It's showing down slightly. That's more due to the bid-ask spreads that open up a little bit after the market closes. So that trade's probably actually at about a break even. This trade started as a longer-term broken wing butterfly, and no two ways about it. This trade has been a pain. Now, if our markets stay in this general range where they're at right now for the next 40 days, this trade will have some nice profit in it. But it is being stressed right now as the market has moved up. As for my market analysis, I think the market's likely to stay in this general range or possibly go lower. If it does go lower, I have talked about ways of adjusting this. And when we were back in this general range, I shared with ideas with people that were in the alert service of ways that they could adjust this to flatten that T0 line, essentially to take some of the upside risk out of that trade. I personally chose not to do that, but I explain different ideas, different concepts on ways people might want to consider adjusting trades like this. And then I have this long-term trade in Lucid Motors. I am still taking a look at that. I'm not quite as bullish as I once was because their Gravity, their new SUV, which has won all kinds of awards, is launching. It's being very well received as far as a top-notch product, but that's not really moving the needle just yet. So that is of concern to me because that was my catalyst for entering this trade. So if I go another week or two on this and I'm not seeing some up move in it, I may end up pulling the plug. But that's designed to be a long-term trade. That's almost 2 years out is when that one expires. So I did give this plenty of time to move in my direction. But at the same time, I also said I want to be in this trade 2 to 3 months and see if I start to get that movement as the Gravity launches. And that has not happened yet at this point. So that's, again, a little bit of concern to me. Now, one final thing I wanted to share with people. I personally used to use a particular product for tracking all of my personal finances, all my credit cards and bank accounts, investment accounts, etc. It was Intuit was what I used at the time. Intuit, as many have dumped their product and their free product specifically. I operate on a Mac, so it was very difficult for me to find a product that I really liked. There was Quicken, which I never really thought was great on the Mac. It's different on the Mac and the PC. It's also a very old dated product from my perspective. I ended up going to something called Monarch Money. I find it to be very good, very intuitive. I've used it for about 2 to 3 years now. It not only tracks all of my investments, but also my spending, my monthly spending, etc. I can put everything in categories so that I can go in, quickly look at a budget, see how I'm doing against that budget. And because I've been a member for a while, they gave me the opportunity to provide people with a 50% off on the purchase of Monarch. And again, I find this to be a really good program. I'd urge you to check that out. It is on the iPhone, iPad, Mac, and it's all web-based, which makes it very easy and intuitive to use. Anytime I make a charge, for example, it pops up almost right away, letting me know that so that I can monitor that. It gives me detailed information about all of my income, where that is flowing out to, gives me some great diagrams to use. So I find this to just be a very good program. And if you want to check it out, I'll put a link on the screen here and in the description down below that will give you a better deal than what they're currently offering to people that just show up on their website. So take a look at that if you are looking for a tool to help you budget, to help you manage your spending, your expenses, as well as your investment and retirement accounts. I've got those connected as well. All of my trades feed directly into this. So I just find it very helpful across the board. So that's it for now. Thanks, everyone. Take care.